Hey, this is Justin with DayTradeTheMarkets.com on Tuesday, February 5th, and I wanted to do a bar-by-bar replay of the emini S&P today and do it on a 1-minute chart. And again, this can be used on any market, any time frame. Just going to look at the 1-minute ES, but again, you could use this on any market, any time frame. Now, before I get going, I wanted to give a little bit of background in terms of kind of how we look at the market and our philosophy. And what we have is a software that produces in real time by looking at order flow, velocity, volume, range, some other factors. We're trying to look at what's going on under the surface of the market with these relative aggression bars. We also have high velocity moves, and then support resistance zones that form in real time, deceleration and divergence bars that form in real time, a filter, directional filter that helps you stay on the right side of the market in real time. Then we also look bigger picture prior to the day at some bigger picture buys and bigger picture key levels. And the idea here is that each of these pieces of evidence is akin to a piece of the puzzle, and the more of the pieces of the puzzle that come together to support a decision or to help you make sense of the market, the better your edge. In other words, the more pieces of the puzzle that come together, the clearer your image of the puzzle is. And if you can have better information, that can lead to better decisions. And if you can continuously focus on making the right decision at the moment, the results are going to reflect that. So instead of focusing on your results, you're focusing on what the market's telling you so that you can make the best possible decision, and that leads to better results. Okay, so with that said, let's go ahead and run the replay of the well, you know what, before I do that, let me touch on this real quick. Going into the day, we like to look at a bigger, what we call our bigger picture bias, and then our bigger picture key levels to kind of give us the 30,000 feet view, the overview. And then with that, we want to see how the market reacts in real time to either confirm that or to give us contrary evidence so that we can adjust. Okay, so heading into the day today, our bigger picture bias was up. And we were expecting, as the market closed yesterday, we were expecting containment between this 97 area and the 91 area, essentially. And I've drawn some blue lines in there. And now you can see that we opened here overnight. We had some activity. And we opened above that. So what we want to do at this point is, we've opened above the expected containment. That's certainly bullish. But we want to see if the evidence that the market's giving us once it opens confirms that, and it's telling us that bulls are still in control. And if so, can we go test this 0550 area, which is a level we want to watch? And if we can get through there, can we go test this 01050 area? Okay, so this is heading into the day what we're thinking. Okay, so let's let this run forward, and I'll put it in fast speed. And really the point here is just to kind of talk about what we're seeing, and I'll pause this when we get to any key decision points that we need to focus on. So you can see that at this point, let me pause this. You can see this is our first major structure, our first what we call level 2 buying aggression bar. And just to give a little bit of background, and I'll be quick on this, what these relative aggression bars are basically kind of the first piece of the puzzle, the first thing we're looking at. We're trying to get under the surface of the market to really make sense of what the real-time order flow is telling you. So it's telling you which side, number one, is more dominant or more aggressive at a given moment, because it's actually what moves the market is aggression. When either buyers or sellers are collectively more aggressive than the other side, that's when the market moves up or down. So we want to determine first which side is more aggressive at a given moment, and then second, to what degree that domination is occurring or that aggression is occurring. And so we have these level 1 buying bars, level 2, and level 1 selling bars, and those are giving us information. It's nothing that you want to put too much stock in, but it's telling us that, moderately speaking, buyers or sellers are a little bit more in control. Now, once we get to these level 2 and level 3, the strong buying and strong selling aggression bars and the extreme buying and extreme selling aggression bars, that's when we really want to pay attention, because those are giving us benchmarks or pieces, a roadmap, if you will, to what the likely short-term direction of the market's going to be. And again, this is not just looking at price action, and it's not looking at some technical indicator that's telling you what did happen. This is telling you what's going on right now under the surface, because it's this order flow that leads price. If you can see what's going on under the surface, then you're going to be able to predict better what price is going to do. And that's the goal here. And also, so that it's not just raw data, it's actually helping you see it more visually, very quickly, so you can make quick decisions off of that information. So if we go back to our our chart here, here's our first strong bar, a level 2 buying aggression bar. And so at this point, we've had a gap from yesterday's close, not really a gap from yesterday's full body of market activity, but we have had a gap. So we want to ask ourselves, are we likely to go test this gap from the close, or are we likely to head higher? And this first major structure is going to be a pretty good indication of whether that happens. Can this low hold? If so, and then can we take out the high of this bar? If so, we would expect short term that bulls are still in control of this market. If, on the other hand, this bar is rejected, especially if it's rejected quickly, and we get some activity below this bar, that's at least telling us short term that we're looking to head a little bit lower. Okay, so with that said, that's our first major structure. Let's have a look at what happens here. And you can see we are testing the high now. As long as the low of this level 2 bar holds, we have to say that we're still basically in control with the bulls. Let me pause it here now. Now you can see once that low held, now we have another level 2 buying bar. This one didn't even test the low, just had immediate acceptance above. And here is a level 3 selling aggression bar. This is an extreme buying aggression bar. And so again, the low of this level 3 buying aggression bar is a really important point for us going forward. As long as that can hold, we have to assume, or until another major structure comes about, we have to assume that the bulls are still in control. And at this point, we are likely to go and test this 0550 area at this point. Now, one of our favorite trades is what we call the level 3 retracement trade. So that if you can first, you can see that our filter just turned green here, which is telling us that, again, that's confirming that a lot of positive or bullish order flow is coming into the market. So if you can have a pretty good feel that bulls are in control, which we do. Again, our bigger picture bias is up, we've gapped up, we've taken out the first structure to the upside. Pretty good indication bulls are in charge. Now you want to look for a way to get into the market. And one of our favorite ways is to get in at the low of a level 3 bar, which would be putting a limit order or waiting for the market to test here and give you some confirmation toward the low of this bar. But again, the first priority is making sense of the context, putting the market in context, which side is more in control. Okay, so let's run this forward a little bit. You can see a level 1 selling bar, nothing to worry about there. This box is what we call a high velocity move. That's just another way of looking at another way of saying that bulls are making a pretty hard charge right there. So again, now bulls are still basically in control of this market until the low of that level 3 bar can get taken out. And that's potentially a pretty good trade entry location somewhere in there to take advantage of this bullish condition that we're seeing in the market. So we're just meandering higher here. You can see that our filter turned dark green, which is strongly bullish. So it's telling us even more positive order flow is coming into the market. And until that changes, you would certainly want to be wary of going against that. So again, some level 1 buying bar or selling bars in there. You can see at this point we've had what we call a support and resistance zone. Let me pause this. Support and resistance zone have come in here. Here's support, here's resistance. Now normally that would be red, okay, showing resistance, but in this case it's actually gold or amber, and it's kind of like it's caution, like a yellow light at a stoplight. What that's telling us is that this is an area that we want to monitor to see if it can act as any resistance, but ultimately we would expect the market to push through here. Okay, it's a caution zone. It's telling us monitor that, but the market's pretty strong right now. Don't necessarily consider that to be too much resistance. Okay, so at this point what we're looking for is, can the low of this level 3 bar hold, and if not, it's probably going to go test this support zone. And if it doesn't hold that, it's probably going to go test down to 97. If it doesn't hold that, it's going to go test down to 91. So it's kind of like ladders or steps. Now if this low can hold, then we're going to go test this high of the day, this 0550 area, and we'll see if that can hold. And if we get above that, then we'll probably test it again and go test the 10. So it's kind of like ladder steps, just kind of keeping you on the right side of the market, bigger picture, and then also seeing what the structure of the market's telling you shorter picture or shorter term. Okay, let's play this forward a bit. Okay, so we're testing into this resistance, and you can see the market's backed off a bit. Again, it's not, so that's kind of what we expect, but ultimately we wouldn't want to lean too much on that in terms of a resistance area. Okay, let me pause it right here. Here's a scenario where, we're testing into the low of this level 3 bar. We have a strong, bigger picture up bias. We have a strong bullish filter. This is a good location to be looking to get long. There's two ways that you go about doing this. One would be a limit order either at the low or one tick above, which we just tested there, probably not filled. Another way is to wait for that area to get tested and then wait for some kind of confirmation. And this is potentially confirmation. This is what we call both a divergence and a deceleration. And what that's telling us here is that this bar has a lower low than the prior bar, but the level of selling aggression is actually decreasing. So in other words, this bar that has a lower low than its prior bar, if the selling aggression were increasing, then our expectation would be that the market would continue lower. But when the level of selling aggression is actually decreasing, then that's telling us a very short-term potential turning point. And with these decelerations and divergences, this is not something you would want to just trade blindly. But if you have other reasons to potentially get into a trade, they can be a nice little extra 1 or 2% confirmation that's telling you. So again, we have a bigger picture up bias. We have a strong bullish filter. We have the low of this level 3 bar, which should be a good trade location. Now we have that extra, so all signs are kind of go. Now we have that extra confirmation of this deceleration. So that's, if you don't get filled on your limit order, or if you would rather wait for confirmation, you can do that, and here's potentially that confirmation, especially when this high gets taken out. Now, we would call that confirmation. Okay, so that's potentially an opportunity to get long, depending on your style. Again, the key here is taking the evidence to make the best decision that fits your style. We give guidelines, we talk about that, but this is a tool that you want to utilize to help you make the best possible decision to fit in with what you might already be doing. You could use this as a standalone, whatever the case may be. That the goal is to help you increase your edge. Okay, so now we're testing this 0550 bigger picture level. We're testing this yellow shorter term caution zone or potential resistance zone. Okay, so we're testing these areas. Now here's a situation where you can see that this market just turned over to green. Okay, so it's gone from a caution zone to more of a support zone. Bigger picture bias is up. The filter is strongly bullish. We're kind of trading against this 0550 area. This is certainly an area that makes sense to take a long. Does it mean somewhere in this area? Does it mean that it's going to work out automatically? No, but it's certainly an area that you have an edge. If you take that trade 100 times, it's going to work out 60, 70, 80% of the time. Okay, so let's play that forward. And think about getting long. If you're already long from down here, then let me pause it here. Okay, so we have a level 2 bar that just came in right here, level 2 selling bar. Now that's potentially an opportunity. If this thing gets quickly rejected and its high is taken out, that's confirming that this attempted push by sellers coming in was rejected, and we're going to head higher. But if you have a limit order in here to get long, which again makes sense, this is giving you a bit of a hesitation. It's a bit of a red flag, if you will, telling you, okay, be on your toes. This thing needs to either move your stop up a little bit or be on your toes to see if any more selling comes in, because you probably want to bail out of this trade because there's other evidence coming into the market. So again, getting long in this area makes sense. Now we've had our first little bit of a caveat that says, just use some caution. Let's see if any more selling comes in or if we can get a bounce. Okay? Let's play this forward again. Okay, so we're trying to take out the high of that level 2 bar. Not having much luck. So again, at this point, you know, you have to consider, do you want to take about a scratch on this long, or do you want to hold it a little bit longer and see what happens? Do you want to wait to see if there's more selling that comes in, and in that case you want to get out, or if we can take out this high and move higher? That's kind of the question you have to ask yourself at this point. There's not really, you know, any major selling evidence that's come in. We haven't really taken out. We haven't had much activity below this level 2 bar. Now, however, we have another level 2 selling bar right there. And at this point, you know, again, getting long here made good sense, but at this point we're not seeing any follow through higher, so maybe this 0550 area is going to hold. We're starting to see a little bit of selling come into the market, so you know, you have a choice. Do you want to hold it and take your full stop, or do you want to bail out for maybe a point loss rather than say a 2-point or a 3-point loss? That's an option you have right here. So even though, again, this made some pretty good sense to get long, just because something makes sense doesn't mean it's going to work 100 out of 100 times. In this case, it looks like it might not be working quite as well, and so you have that option to get out for a minimal loss. Because again, you know, in trade management, you know, whether you got long in here and you're trying to hold it as long as possible to maximize a winning trade and wait till you see some selling evidence, or whether you're trying to, you know, minimize loss on losing trades by getting out a little bit early when you see some contrary evidence. Either way, if you can minimize your loss by just a little bit on your losing trades and get a little more profit on your winning trades, that's going to really add up over the course of a month or a year. So I mean, that's again increasing your edge. That's what it's all about. Let's play this forward a bit. Okay, now you can see at this point the green support zone here has turned back over to a caution zone. So at this point you're starting to see some evidence that, you know, if you did get long around the, you know, the 05 area or so, it might make a little bit of sense to get out of the way. Just cut your losses. It's been an hour. You know, just take a scratch or a near scratch, or, you know, point loss, something like that. Just not a big deal. Keep those losses small when you take them, and try to maximize when you get good opportunities. And let's just see, at this point you got to be thinking, okay, are we going to break through this 0550 area and make a run at this 10 area, or are we going to, is this actually going to hold, and are we going to go test, number one, the low of this level 3 bar, and then number two, this other support zone that's come in right here. So those are the things that we want to kind of think about. So you can see another level 2 selling bar. Not really any follow through. And again, you know, this has been, you know, a good 2 hours of the market moving within a 2-point range. So it's just showing us this is definitely a bigger picture, a bit of a resistance area, and we're going to go one way or the other, and let's see which way that will be. Again, if we can break higher, that'll give us information that we can use to try to get back on the long side. Okay, so now we have a scenario where you can see we're making new highs, we're starting to break out a little bit, and this zone has turned back to green. So at this point, let's kind of add up what we're looking at. Our bigger picture bias is up, our filter is still strongly bullish. We have a 0550 area that's been tested and looks like it wants to fire through. We have now a support zone, just like we had here, you know, but again, we tried to fail here. We didn't do a good job of failing. In other words, bears tried to step in. They didn't do a very good job. Now we're back above it. We've turned green again. So that's you know, this is where we had a live education session with our members today. This is about where we tuned in, and you know, we were talking about this area being potentially pretty good opportunity for trying to get on board along. And so again, the way that you can do that is a couple of options. Number one, you can just put a limit order somewhere in this area, 0550, 0575, even 0525, somewhere in this area, knowing that this area should act as support, and as long as you keep your stop down here, potentially, you know, in this area, and be willing to bail if some selling evidence comes in, you have a pretty safe trade opportunity there. Okay, so let's play this forward. I realize this video is getting a little bit long. Thank you for hanging in there with me if you're still into it. And I'll try to move forward here. We still have a lot of stuff to talk about. So again, at this point, you're thinking about somehow getting long in this area if you can. Here's some potential confirmation with this deceleration. Okay, here's a level 3 bar, and that's telling us, this is giving us confirmation. There's a few options here. That's giving us some confirmation that bulls are actually in control. We're making new highs on a level 3 bar. So at this point, again, we have a pretty good feel that bulls are in charge. So how do we get on board? The aggressive way would be with what we call the breakout trade, where you just get long at the market on the level 3 bar at the high of the day. That'd be the aggressive way. The more conservative or moderate way would be to wait for the retracement down toward the low or toward the a tick above the low of this bar. Okay, so you have two options. Now there's a cost with each one. If you get on board with the market and the thing retraces down to here, you take some heat. Okay, if you wait for the retracement and it breaks out, you miss the trade. So it's kind of a trade-off versus risk versus opportunity, and there's no right or wrong answer. It's based on personality, but you just have to own that. So if you're I personally tend to be the type of person, this has taken me a while to do that, I try to be the type of person that waits on pullbacks, and so I'm more inclined to wait on this than go with the breakout. I understand the trade-off with that is that when I'm right, I'm going to get really good trade location and I'm not going to take much risk. When I'm wrong, this thing's going to take off without me and I'm going to miss that. But I have to own that. I have to know that that's okay. Okay, so my point is not that there's one way that's right and one way there's wrong. It's just know yourself so that you can make the best decision for you, and then own that and be okay if the opposite happens because you understand that it's a trade-off. So hopefully you can find that helpful. So we're just kind of meandering higher. Here's an attempt by some sellers. Let's see if we can get a full bar below there. If we get this high taken out, that's going to be relatively indicative of the next move. But at this point, we have to think that our expectation, anyway, doesn't mean it's going to happen, but our expectation is that we're going to go up and test this 1050 area. Okay, we've tested this 0550 area. We've busted through there with level 3 acceleration. Our expectation would be that the 01050 area is tested, and then we'll see what happens. Do we get further acceptance above, or do we get rejection? So there's a level 2 buying aggression bar. So it's just showing us, more buying is coming into the market. And once we get to this 1050 area, this is a really interesting point, or an interesting decision point that we were talking about in our education room today. This was kind of a really key moment. This 01050 was a high from last week, which was a long-term high, and so this is going to be an area where a severe decision is going to be made. And let me go ahead and pause it right there. So at this point, you can see we have a level 3 buying aggression bar on the high of the day. We've already had a nice run up in this same basic vertical move. Okay, and typically when we get a level 3 bar, we had one here, had one here, had one here. It's either the beginning of a vertical move, in other words, we expect the market to continue higher, or if it gets rejected, it's often the end or capitulation. It's out of gas, so to speak. Now this is a little bit different in that, not a little bit different, but there's another component here in that this is a long-term big picture high from last week, and all of the bears that are positioned, bigger picture positioned short, are probably going to want to protect this area. So someone at this point, we're talking about this, is probably going to get punished. Okay, either the bears are going to step in and drive this thing down, and all the bulls that were late to the party that are just trying to get in now are going to get punished, and we're going to have to move forward. Or better yet, from what we were looking at, if this can push through, all of the people that were positioned on the downside are probably going to get punished, and we're going to have a nice run up as we get through some of their stops. Okay, so that's kind of what we're thinking at this point, and we want to see, can this low hold? Okay. So we haven't been able to get any follow through higher. But still, we want to see if this low can hold, and if there's other evidence that comes in. You can see again, here's a caution zone on the high. We're starting to test the low of that bar. I want to pause it right here. This is a scenario here where, again, we have bigger picture bias at the 1050. We've had a level 3 bar that has not had follow through yet, and then we test it again at this 1050 area, and we have a deceleration right here. Okay, so people were asking questions, is this potentially a good short trade? And so you have to, there's no clear answer to that. You are getting some evidence that potentially makes this a pretty low risk opportunity. If the bears can maintain this area, we're probably going to punish the bulls that were late to the party and have a move down toward this 0550 or 06 support zone. Okay, so in that sense, it's relatively low risk, high reward, in that you could get in on board here and really only have about a point and a half of risk with where your stop would need to be, and you could get on a nice trade. Definitely would be very aggressive. It's more aggressive than I personally prefer. That doesn't make it right or wrong. It's just I was kind of waiting for a scenario where we could bust through and punish the bears. That ends up not happening, but it's just a matter of, okay, what are you seeing and how do you want to utilize that? If you're aggressive, certainly this made some sense to get on the short side, because again, it's low risk, relatively high reward, and then if this area does hold, we should go and test the next level down. And if you're wrong, you lose a point. So I mean, it's not a bad, it's certainly aggressive, but it's not a bad decision. Okay, hopefully that makes sense. Again, that's not something that I was doing, but I mean, you can make a good case for that. Now here's a level 2 selling aggression bar. So we're starting to see a little bit of the bears coming in. Here's a level 3 buying bar. So at this point, we're talking, there's a real battle going on here. And again, someone's going to get punished. Someone's going to be wrong and have to bail out of their trade collectively, and we're going to move one way or the other. And this is really an intriguing possibility here. So again, if you look at the level 3 bars so far, this one had follow through. This one had follow through. This one did not have follow through yet. Is this one going to get follow through, or is this one going to get rejected? That's going to be an intriguing, scenario to see. Okay, so its low is getting taken out on a level 2, but there's still a battle going on here. So you can see our filter here, though, is starting to tell us things are changing a bit. We've lost as much bullish control. Now we're in basically a neutral filter. Okay, so here is a level 3 selling bar. This is the first level 3 selling bar of the day. And we were looking at this, and if this got rejected, in other words, the high of this got taken out, that's probably a pretty good indication. Bigger picture up bias, rejection of an extreme selling event, probably is going to go test the high. If this low gets taken out, however, and this high can hold, we're probably going to go test this level. So this is another key decision point that you can see. But again, if you look at the level 3s and what they're telling you, follow through higher, rejection higher, rejection higher. Okay, so you can see things have started to turn. It doesn't mean we're going to go make new lows on the day. It's just telling us short term things are changing. You're seeing actual evidence that things are changing, and that short term, this is what we were talking about as well, that bears are starting to come into the market. So this will be an interesting structure to watch at that time. Okay, low is taken out, another level 3, a couple level 3s. Now it's getting, you can see our filters changing. We're getting toward the close of the day here, but it certainly is interesting if you put it in the perspective of what happens on those level 3 bars, follow through or rejection. Same thing applies to some degree on level 2 bars, but especially level 3 bars. Especially level 3 bars. If you're getting follow through or if you're getting a rejection, it's giving you a very good short-term idea of which side is in control. And so you can see that again, we gapped up from yesterday's close, bullish structure all the way through. bullish structure. Here's the first time, and it happened to be corresponding with this bigger picture 1050 area. We didn't get follow through. Okay, and then we started to see some selling come in. Okay, so it's just interesting how that works out. And again, we just kind of go from ladder step to ladder step. We're above this level. Okay, let's test this level. Can we get above this level? Let's test this level. Can we get through to the next level, which there really isn't one because it's been so long since we've been up here. You know, and if this does hold, then we're probably going to go back and test this level. And let's just kind of see which side wins at each of those key decision points. So hopefully that made sense. I realize this was a long video. I appreciate that you stuck around for it. But again, this is a tool that can just help you make better sense of what you're seeing in the market. So hopefully you found that helpful. If you have other questions, and you can use this on any market. If you have other questions, by all means, just shoot us an email at info@DayTradeTheMarkets, or respond to this email that you received, and we can help. All right. Hope you have a good evening. Talk to you soon.